Okay, so you guys sent us in some really interesting stuff this time around.
Yeah.
Really focused on kind of what's been happening in the tech market lately
Mm,
and making a pretty compelling case for investing in Amazon right now.
right.
So for this deep dive, our mission is pretty straightforward.
Okay.
We're going to break down the core arguments for why this analysis sees Amazon as a strong buy,
Interesting.
especially, given all the talk of an AI bubble burst
Right.
and kind of a recent cooling off that we've seen in the tech sector.
Yeah, makes sense.
And we're looking at some investment analysis here.
Okay.
So let's get straight to the question that you're likely asking.
Right.
Why does this analysis think that Amazon is such a standout investment opportunity?
At this particular moment,
Yeah.
that's a great place to start. I think, what's fascinating here
Yeah.
is how several factors seem to be converging according to this analysis.
Okay.
And it starts by looking at this idea of an AI bubble. Right. We've seen a lot of excitement, a lot of money flowing into companies that are related to AI, artificial intelligence.
Right.
And this source suggests that the recent market downturn has essentially kind of taken some air out of that bubble, leading to a reevaluation of how much a lot of these tech companies are actually worth.
Okay, so let's unpack this AI bubble burst then a little bit.
Yeah.
So the feeling is that this rapid increase in the value of AI stocks
Mm-hmm.
just wasn't sustainable.
Right.
And that recent, market concerns kind of brought things back down to a more realistic level.
Yeah.
And this analysis believes that that correction is actually a positive thing, particularly for some of the major players like Amazon.
Yeah. I think that's the key takeaway here,
Yeah.
is that the analysis points out that the NASDAQ,
Mm.
which has a lot of tech companies, hasn't performed as well as, say, the S&P 500
Okay.
during this recent selling period.
Right.
So the big tech companies, the so-called Magnificent Seven,
Yep.
have definitely felt the impact of that. But the key insight from this analysis, I think, is that this correction has actually made some of these giants appear historically undervalued.
Okay.
So think of it this way. These companies that often seemed very expensive might now be available at a relative discount.
Historically undervalued. That's an interesting point.
Yeah.
It's easy to think of these massive companies as always commanding a premium.
It is, and I think if we connect this to kind of the bigger picture,
Yeah.
the analysis highlights a really interesting shift in their valuations.
Okay.
And they point out that for the first time since 2017, the forward price to earnings ratio, or PE ratio of the Magnificent Seven, is nearing a relative discount
Okay.
compared to the broader market.
Interesting.
So for you, what's key to understand about the forward PE ratio
Yeah.
is that it looks at a company's current share price compared to its expected future earnings per share.
Okay.
So a lower ratio can suggest that a company is potentially undervalued
Got it.
compared to how much profit it's expected to make.
Makes sense.
And the fact that these huge tech companies are collectively starting to look cheaper relative to the overall market,
Yeah.
that's a pretty big deal.
That is interesting. Yeah. So these companies that have driven so much market growth
Right.
might now be offering more value based on their future earnings potential.
Exactly. And the analysis goes further than that.
Okay.
They specifically call out Meta, Google, Amazon, and NVIDIA as appearing especially attractive right now.
Interesting.
And they point to PEG ratios under 1
Okay.
and forward PEG ratios close to 1 as kind of indicators of this undervaluation.
Got it.
Now, the PEG ratio, that's the price earnings to growth ratio,
Yeah.
takes into account the PE ratio we talked about,
Mm-hmm.
but it also considers the company's expected future earnings growth.
Right.
So generally, a PEG ratio under 1 suggests that a stock's price might be low compared to its growth potential,
Okay.
essentially a growth potential bargain.
So not only are their stock prices potentially low relative to their current earnings,
Right.
but when you factor in how quickly they're expected to grow, they look even more appealing.
That's the idea. Yeah.
Interesting.
So they contrast these four with Apple, Tesla, and Microsoft, which
Uh-huh.
they believe are still trading at premium valuations.
Got it.
And out of all of these, the analysis really focuses on Amazon as the most compelling investment case right now.
So let's zoom in on Amazon then.
Yeah.
Why does this analysis see its valuation as particularly attractive at this moment?
Well, the analysis highlights that Amazon stock is currently trading at a forward PE of around 36.
Okay.
And for a company with Amazon's track record of growth,
Mm-hmm.
and importantly, its improving profit margins,
Okay.
this is described as remarkably low.
Wow.
So think about it, a company of this scale,
Right.
with its reach and its future prospects,
Yeah.
trading at a PE that suggests it might be a bargain.
That does sound surprising when you consider Amazon. I
Yeah.
think we often think of it as such a dominant force,
Right.
but maybe not as a value opportunity.
Exactly. And I think the historical context here is key.
Okay.
The source reminds us that Amazon has typically been a high PE stock.
Mm-hmm.
And that was largely because they were aggressively reinvesting their profits back into the business to fuel growth, right? Expanding their infrastructure, entering new markets, and so on.
Right.
But now the story seems to be shifting
Yep.
as those investments start to generate better profits.
Got it.
And so this analysis frames this moment as potentially a once-in-a-decade opportunity
Wow.
to buy into Amazon at a relatively low valuation given its future potential.
A once-in-a-decade opportunity. That's quite a statement.
It is.
So what's driving these improving profit margins that are making this valuation look so attractive?
So a significant part of the story is about margin expansion and how AI and automation are playing a role.
Okay.
So the analysis points out that Amazon's core retail business has historically had relatively thin profit margins,
Right.
mainly due to the significant costs associated with things like warehouses and shipping.
Yeah, that makes sense.
But this is where AI and robotics are expected to make a big difference.
Okay, so automation isn't just about, faster delivery or anything like that.
Yeah,
It's
yeah.
about bringing down the cost of doing business.
Exactly.
Okay.
The analysis details how Amazon has already started implementing AI-powered automation in its warehouses and using technology to make its logistics more efficient.
Right.
And this is expected to lead to some significant cost savings.
Yeah.
The source even mentions reported plans for around 14,000 worker layoffs
Wow.
as part of this drive for efficiency.
Okay.
So the investment in AI and automation isn't just about future growth.
Right.
It's about making their existing operations more profitable right now.
That's a substantial shift.
Yeah.
So while we often hear about job displacement due to AI, here it's directly linked to improving a company's bottom line.
It is. And we can't forget about AWS, of course.
Right.
Amazon Web Services.
Of course. Yeah, their cloud computing division.
Yeah. The analysis rightly points out that AWS remains a primary driver of profit for the company, generating high-margin recurring revenue.
Right.
Think of AWS as the infrastructure that powers a huge chunk of the internet,
Yeah.
providing this consistent and profitable stream of income for Amazon.
AWS is kind of the workhorse behind the scenes.
Yeah.
And beyond that, what other areas are contributing to these improving margins?
Well, the analysis highlights the significant growth of Amazon's advertising and subscription segments.
Okay.
So the advertising business in particular tends to have very high profit margins.
Right.
And services like Prime memberships provide a stable recurring income stream.
Right.
So these are diversifying Amazon's revenue sources
Got it.
and adding, significantly to their overall profitability.
Okay, so we've got a potentially deflated AI bubble creating lower valuations.
Right.
Within that, Amazon looks particularly attractive due to improving profitability driven by AI, the strong cloud business, growing advertising and subscription revenues.
Exactly.
What about the future?
Yeah.
Where does this analysis see Amazon's growth coming from in the years ahead?
Well, the source outlines several key future growth drivers.
Okay.
First, there's the continued growth of AWS, which is expected to get a significant boost from the ongoing AI boom.
Right.
As more and more companies develop and use AI applications.
Yeah.
The demand for the kind of cloud computing power that AWS provides is only going to surge.
Makes sense.
And Amazon, as a leader in this field, is in a prime position to capitalize on that.
All those AI models need a place to run,
Exactly.
and AWS is a leading provider.
Yeah, and what's interesting is the second growth area they point to
Okay.
actually kind of circles back to what we talked about earlier
Okay.
with the e-commerce and logistics transformation.
Right.
They go into more detail about how these technologies, things like advanced robots in warehouses,
Right.
AI-driven systems that predict demand more accurately and help with inventory management, and even the potential for autonomous delivery in the future.
Wow.
All of this is expected to continue to improve efficiency and lower costs
Right.
in their core online retail operations over the coming years.
So AI isn't just a separate growth engine like AWS.
Right.
It's also making their existing e-commerce business run more efficiently and profitably.
Exactly.
Okay.
And the third major growth driver they highlight is the continued expansion of their advertising and subscription services.
Right.
So the advertising business has seen some pretty impressive growth.
Yeah.
And with Amazon's massive user base and the vast amount of data they have,
Right.
this trend is likely to continue.
Yeah.
Similarly, the loyalty and the recurring nature of Prime memberships provides this solid foundation of revenue that supports overall financial stability and allows for future investments.
So the underlying business fundamentals seem strong, according to this analysis.
They do.
What about the technical side of things, the stock's trading patterns? Is there anything in the charts that supports this optimistic view?
Interestingly, the analysis briefly touches on what's called technical analysis, suggesting that the stock is actually showing signs of a strong reversal.
Interesting.
They point out that the stock price has bounced off an area where a high volume of shares have historically been traded. Kind of a high volume support area. Think of it like a price floor, where a lot of investors have showed interest in buying in the past, suggesting there's strong demand at that level.
And what about those indicators they mentioned, the MCD and the RSI?
Yeah, so they mentioned the MCD, which refers to the moving average convergence divergence as suggesting an upcoming bullish crossover. This can signal a shift in the stock's momentum to the upside, indicating that the price might start rising.
Got it.
They also mentioned the RSI, or the Relative Strength Index, forming a bullish divergence. Now, the RSI is often used to identify potential overbought or oversold conditions in a stock. So a bullish divergence is another technical pattern that can suggest a potential trend reversal.
Got it.
Where the price might start heading higher, even though the indicator initially suggested it might continue to fall.
Interesting.
So these are just some potential signals that technical traders look for.
So from both the perspective of the company's financial health and the stock's trading patterns, this analysis paints a pretty optimistic picture for Amazon stock.
It does.
But are there any potential challenges or risks that investors should be aware of?
Of course. I think the analysis does acknowledge potential short-term risks. Specifically, it mentions the possibility of a U.S. recession, which could certainly impact how much consumers spend, and as a result affect Amazon's e-commerce sales.
That makes sense.
If the economy slows down, people might cut back on their online purchases.
That's definitely a relevant concern.
It is.
Given the current economic climate. So how does the analysis address that potential risk?
It suggests that Amazon's diverse sources of revenue, the strength of AWS, the growth in advertising and subscriptions, along with the expected benefits from the cost efficiencies driven by AI, should help to lessen these risks over the longer term. So the idea is that even if one part of the business, like e-commerce, faces temporary difficulties due to a recession, the other strong segments can help to support the overall performance of the company.
So the main conclusion from this analysis is a pretty strong belief in Amazon as a good investment for the long term right now. To quickly recap, why does it stand out as such a compelling buying opportunity within this group of major tech companies?
I think the key reasons are the improving financial fundamentals, particularly those increasing profit margins, thanks to AI and automation, the ongoing strength and growth potential of AWS.
In this expanding field of artificial intelligence.
Of course.
The diversification of their revenue through advertising and subscription services, a stock valuation that looks pretty attractive compared to its growth prospects. Especially after this recent tech market slowdown. And even some signals from technical analysis that suggest the stock price might be poised to move upward.
And what's the ultimate conviction expressed in this analysis?
So the analysis concludes with a strong belief that Amazon stock is unlikely to be trading at lower prices 5 years from now. Which really underscores their confidence in the company's long-term potential for growth.
Well, that gives you, our listener, a lot to think about.
It does.
It seems like this analysis lays out a solid case for Amazon as a compelling investment in the current tech landscape. So to bring it all together for you, the key takeaway from this deep dive into the sources you shared is that this analysis positions Amazon as a strong long-term buy.
And this is based on its appealing valuation in a post-AI bubble market. The increasing efficiency of its operations driven by AI. And its diverse and expanding revenue streams.
Makes sense.
And, you know, this leads to a really interesting question for you to consider. Thinking about these rapid advancements in AI and automation that we've discussed in the context of Amazon. What other industries or specific companies do you think might experience similar transformative cost efficiencies in the coming years?
That's a great question.
And how might those potential shifts impact your own investment decisions or even your career path?
Yeah.
It's about taking the lessons from one case study and thinking about the broader implications of these technological changes.
I love it.
Definitely some food for thought.
Yeah.
Thank you for bringing these insightful sources to our attention.
You got it.
We encourage you to continue exploring this fascinating area.
Absolutely.
And thank you for joining us for this deep dive.
Yeah. Thanks for having me.
See you next time.
All right.
Bye.